Welcome to Repair Shop Reckoning, the race to zero, because chasing the cheapest price is the race to the bottom. And Kevin Brown has spent over 30 years proving that's not how you build a real shop. 3 decades in the trenches, mechanic, owner, operator, leader, through industry shifts, insurance games, bad hires, good hires, and hard lessons. This isn't theory. This isn't corporate training fluff. This is over 30 years of shop ownership experience, unfiltered. On this show, Kevin breaks down what actually works: running profitable shops, front counter control, insurance negotiations, leadership, culture, and the mistakes will quietly bankrupt you if you let them. No corporate scripts, no sugarcoating, and yes, somebody might get offended. That's okay. If you want comfortable, Disney's 2 doors down. If you want the truth about this industry, buckle up. This is Repair Shop Reckoning. Let's get to work.
So, all right. Well, I am super excited today for my latest guest, Maria Montie from Shindel Rock. She is our accountant, and she is awesome. So I want to talk about numbers, how important it is for business owners to know their numbers. I preach it all the time. There's some guys online that say we hire it out. It's just easier to let somebody handle our cash flow and our payables and stuff. I am 100% against that. I think you should be in control of your own money. Nobody watches your money like you watch your money. So take it away, Maria. Shindel Rock, what you do for us, accounting. We'll just go back and forth, have a nice casual conversation about how important your job really is.
Yeah, great. We rock, Shindel Rock. So, which is just kind of funny that it kind of goes along with how I feel about what we do. We're all very passionate about what we do. We're passionate about our clients. We're passionate about helping them through their businesses and making things most efficient from them from our operating standpoint and from tax efficiencies as well. I've been in the business. I started school and I started this working in an accounting firm in end of 1989. And just worked my way up ever since then. I'm now a partner in the firm, been a partner there for 2006. Taking it to the next level with the next generation. We've always focused on even when I was just an employee there, always focused on technical skills, keeping up with the tax law, taking things to the next level, getting specialties, a more in-depth understanding of different areas that impact our clients. As well as technology and getting the right people in there. So those have been our 3 focuses.
Yeah, anybody who knows and has listened to my story, even in my career, you are accountant number 5. You know my
Have I been the longest so far?
Yeah. Well, the term "you don't know what you don't know" started very early with me. Like I had these accountants and they would talk to me and I thought you would call the accountant. They had a magic ball and they would tell you exactly what you do. You need to go buy stuff because you're making so much money. They would give you the answer to how to run your business. That's not the case. Anybody who calls their accountant and says, "Hey, I need, how much money am I making? This, that, and the other thing," they're not doing it right. I mean, I call and talk to you. Hey, where's the tax implication here? This, what should I do here? The tax stuff and ask you directed questions. You're the first accountant I've ever had that could actually answer all the questions. And my previous accountants. Okay.
I know one of them, yeah.
Yeah, from being in the business. And she made quite a mess out of everything. So I'm was very selective. You came to me through Rachel Tucker at our law firm, and they using your came with high recommendations. But once I talked to you, you started answering all the questions like in depth. I'm like, okay, finally somebody that's passionate about what they do, because we all know accounting is very riveting, very exciting work, right?
I think so.
See? Yeah. It takes a special kind of person, just like mechanic work is very exciting. Trust me. But you really impressed me when I talked to you just with your deep knowledge of all of it. And I think that's very important. I think a good accountant can make you or break you. We've always seen that over and over again, where people get in tax trouble. The accountant takes their money, whatever, they're paying their bills. So, I want to talk about, like we talked about, the front of the house and the back of the house and how we do it and how other people do it and some of the horror stories you run into and kind of go from there.
Yeah, well, one of the things, and I think I even told you this probably in our first meeting, is that's important for us to focus on what's going on during the year. And when we get to the tax return, our part of what we do is to create that tax return and prepare it. But we should know what is on that tax return before we prepare it. The tax return to me is a record of what's happened historically. We're going to help build that history and create that verbiage. So we have calls throughout the year, and as things come up, or information, and especially during COVID, like, hey, here's what the law is now, and this is how it's changed, and think about doing this, and let's figure out how this works into what you have going on. So it's that proactiveness. A lot of smaller firms, like right now we're at about 32, 35 people. When you're a small firm, when you're a one-man, two-man shop, you don't have time to do all that stuff and keep up on the law. And what ends up happening is that those type of firms end up being more bookkeeping firms. They're taking all the data, they're keying it in, coding all your checks, doing the bank recs, and then creating the tax return, all that back-end work. Whereas we partner and try and get the businesses to have a bookkeeper internally, externally. They're doing those numbers so that we can use those numbers with you as the business owner and proactively formulate plans, strategy throughout the year so that our time, because we're not cheap. I mean, again, going back to I said we focus on a lot of technical skills. There's a cost to that, so that we use that the best value that we can for you. So that's strategizing with the numbers that somebody else is already having to put together. So we talked about the front end and the back end. We shouldn't be your bookkeeping team. You can have a bookkeeping team, like I said, internally or externally, but we should be part of that team. You, your attorneys, whatever level you might have, an accounting team if you're a much bigger business. So, yeah.
Yeah, one thing that I really liked that you and Rachel already had a relationship.
Oh, yeah.
So I don't have to introduce you. When I go to do something, I've talked about acquiring other businesses, stuff like that. Rachel calls Maria. Maria talks about it. Rachel and Maria. Then you guys come to me and give me, what you guys think of it. Yeah. Which, I mean, for a peace of mind for me, that's great. The due diligence and all that type of stuff is absolutely is great. And, going back to the bookkeeping thing, I think we're a small business, right? So my wife does all the back end stuff and we do the financials, me and her together. How many of your clients have their wife involved in the business, or do they have a bookkeeper that's really not doing a good enough job where it causes you extra work? Or let's talk about that. Because I want to drive home how important your numbers are. Because this is my main thing I talk about on my podcast, that people just don't seem to take it seriously.
Yeah, you got to focus on those numbers. And if you don't have the time to do it yourself, because you are running the business itself, you may not have the time, that may not be one of your strengths, you're not very good at it. You have to get somebody in there to do it, either internally. I have some clients who have either a family member, a spouse, or a sibling help out. If not, we'll help partner with them to find a bookkeeper that might be the right fit for them. But it doesn't make sense for us to spend our time creating those numbers and then doing the analysis. Again, it's expensive for us to do that, and it takes up a lot of our time. Our goal is to focus on using those numbers, which doesn't just mean going and creating and getting those numbers in there. It means doing it timely. Otherwise, us having good numbers a year later, the year's already gone. I mean, there's no planning to help you realize that your cost of goods are out of whack, what's going on, or that you could have done something a little differently. You could have bought some equipment, or you could have financed it instead of paying cash for it, or once it's done, it's done. So having that information timely, internally prepared, and it may not be perfect. That's fine. We can come in and help tweak it, train the bookkeeper, we've had conversations with Marilyn on how to do things a little differently, how to make it more efficient within QuickBooks. And so that's going to be an ongoing learning curve for everybody. But yeah.
How many people are as weird as me that want to have a meeting twice a year before we get ready to do taxes? I think that was probably one of the best ideas that you've ever came up with for me. You're like, hey, we need to meet this month, coming up, and we'll figure out what's going on halfway through the year, see where we're going, come up with a plan. And you're usually within a few $1,000s of what I'm going to owe, which is crazy.
Yeah, by the time we get to the end. But again, we have good solid numbers too. And that makes all the difference. There's nothing that comes up. And one of the things I told you when we first met is nobody likes surprises. We don't want surprises on the back end. And you don't want surprises to come April 15th and say you owe $40,000. And by the way, we could have done X, Y, Z, but we can't anymore. So no surprises is one of our strategies. But with that comes proactive planning, not reactive on the back end. So I have quite a few clients that we do that with their businesses. Some clients opt not to do that. Some of them have a really good gut feel for where things are, and they might just want some tweaking the last couple of weeks of December. But we're pretty busy come November, December, because we're ramping up into that final planning stages for our clients. Whereas a lot of smaller firms might not be busy at that time of year, and they ramp up, end of January, early February. But yeah, so.
Yeah, so right now you guys are getting ready to go work a lot, huh? Or
We
you
already are.
Already
We
are?
already are, yeah.
I know we got one of our companies done already, I believe.
Yeah, it's in the queue.
Yeah.
It's in the queue.
Which I was very proud of Marilyn.
Yeah.
Because she's been, with the grandkids.
Yeah.
I mean, she's got grandkid
Yeah,
fever.
yeah.
Yeah.
Yeah,
so-
it's not easy. But and that one will get going, but we won't finalize it until all the other entities are done so that we have that final picture. And I said, once the year's done, there isn't a whole lot you can do, but there are a few things, so with retirement planning, HSA, IRAs. So there is, a few things you can do to close the gap, which is why we don't want to file one return on its own and then move on. We want to wait until they're all done.
Yeah. How many people, I have four or five, right? So, yeah, I guess they all play a big piece in each other. I didn't even think of it until you just said it out loud. I mean, obviously I know it, but.
But you also have some of that intercompany activity, so we want to make sure those things balanced and that nothing was missed on one end or there was a timing difference at the end of the year. So, yeah.
How many people, I know I already got permission to talk about this, like one of my clients, we're going through his tax returns again because he got the old, hey, by the way, we need you to pay, X amount of dollars, way over $100,000 because that's what you owe. Your sales doubled. And he's like, what? Doing all his numbers, we've been trying to reconstruct everything. And all of a sudden, you just basically told me we don't know the number. This is going to be significantly less. I mean, that poor guy just about had a stroke.
Yeah. Yeah. And I think he paid those taxes too. So we've worked up, literally had to reconstruct his whole books for the year last year for 2024. And we're filing an amended return. And the most of the errors that happened is, again, I don't think they had that relationship where they understood his business well enough or the time to sit down and ask him questions. If you're a small firm and you're just super busy, you don't step back and look at the bigger picture. But the thing that I think was the biggest thing we found is that it looks like they took some of the transfers into the main bank account that came from his other personal account and called them revenue. So revenue is way overstated, which means income's overstated, which means he paid too much in taxes. And it's not a couple thousand. I mean, it's a lot.
Yeah, I was shocked. And I knew it was kind of in trouble when I went down there and we started talking to her. And I called the lady and she's a nice Southern lady. Oh, how can I help you? And I started talking to her and it got shittier and shittier to the point where it's like, you need anything else, you let me know, and hung up. And I'm like, yeah, Tim, I think that might be a little bit of a problem.
Well, there's firms out there, they might be good bookkeeping firms, and not to slam them all, but it takes a lot to keep up with all the tax law changes. It takes a lot to keep up with all the work that's required to help your clients. And trying to do that all on the back end for them in the long run really isn't helping them. So we encourage clients, you need to get a bookkeeper in here. Well, can you do it? I'm like, we can if you're willing to pay X dollars per hour, but we won't even if you are, because that's not where our strengths and our skill set is, and that's not where we want to focus on. We want to focus on the strategizing, on the planning, on using those numbers, those timely good numbers, to benefit you ultimately. So really, in the long run, we'd be hurting you to do that.
One thing that impresses me about your guys' firm, and I've known that over and over again, you're like, hey, we don't do bookkeeping. I could have an accountant do your work that's a little bit cheaper than myself as you, but I always liked how you guys stay in your lane and what you do.
Yep.
Okay, I know friends of mine that they every time a mosquito farts, they start a new business, completely something. All of a sudden they're a t-shirt guy. Then all of a sudden there's a donut shop they open, and and they're like, yeah, squirrel. And me, I contribute my success to I've always stayed in the business I'm in, meaning I fix trucks, collision, I do mechanical, I sell trailer parts. I do repair shop bracketing now, which is all of what I do. So I've always stayed right where I know. I don't try to venture into something I really don't know and kind of guess.
Right.
And I think that's impressive with you guys. You kind of know who you are. You brand it that way and you do your thing and you're good at it.
Yeah.
Okay.
Even at the industries that we'll work in, we're very a lot of our clients are very service oriented, medical industry and a large real estate group, which works very well with operating entities. Oftentimes they own the real estate as well. So those are our key focuses. We had the opportunity when Michigan allowed cannabis. We had the opportunity to get into that. We had quite a few clients who wanted to go out of their lane and get into that industry. And we're like, you know what, that's way too specialized. That's way outside of our lane. We're not going to go down that road. But there are other areas that as clients' needs expand, if it's something that works well within our firm and it seems like it's within our wheelhouse to get up to the learning curve, we will.
Yeah, and I sit there and I think, and my head hurts because it all comes back to running your business profitable so you can afford a professional like yourself and your firm. You actually pay. You said it yourself. You're not cheap. I never said I'm the cheapest guy in my business. I'm the most expensive, but you're going to get what you pay for.
Right. Right. If you want to get your tax return prepared on the back end, then yeah, you can go to H&R Block. They do business returns. You can go to small mom and pop accounting firm, but that's all you're going to get is a tax return that's prepared on the back end. No proactiveness, no foresight, no tax planning. And the other thing, one of my partners likes to point out to clients, potential clients, is that the other thing that you're paying for, and you may not have a big need right now. You might just be a large or 1040 client and don't have an operating business. But the time might come when something significant happens in your life where you're going to need somebody who has a lot more in-depth knowledge and understanding of your situation, where all of that knowledge and that relationship that we have has come into play. You're not going to someone else brand new who has to learn all that history. I know 10 years worth. We talked about staying in your lane. One of the other areas that I personally specialize in, and I have a team at the firm as well, is estate and trust work. And I often use the term holistic approach. So yeah, we do a lot of income tax work, but there's also the foresight of how to structure your entities, what to do with the cash flow that you have coming in to preserve your estate down the road for yourself, your family, to not have to pay estate taxes, to reap the most cash flow wise, because money out the door to taxes is money out your cash pocket. So how to keep that within your family, within your wealth, not just today, but down the road as well. And sometimes knowing down the road what to do with that money down the road, you need to implement things today to get there.
Absolutely. And here's a good example of not having enough money to take care of business. That bullshit that happened here at Motor City Truck Collision where I got the thing from the IRS. Okay. Yeah. Think about it. If I didn't have somebody like you that really knew what was going on and really didn't know, back what you said, you knew my history. Yeah. You know the structure of everything.
Yeah.
So you right away when you got the letter, you're like, this is bullshit.
Yeah. Yeah. And she was she was 2 years within the IRS. She was recruited from right out of college. The IRS was recruiting. I don't think they're doing as much recruiting right now, but she was so confident of herself and what she was coming in predisposed as to what she thought your issues were. And I could pick up on it pretty quickly walking through here what the questions she was asking, which I told you not to be here. And you're like, I want to be here. I'm like, no, take my advice. Do not be here. Because they create their own impressions, and that will dictate a lot of where they want to go and how hard they're going to resist what I want to dispute with them too. If they have these preconceived notions. I had one client who owned a plane, obviously a big red flag for the tax return, not in a bad way. He legitimately had a plane, but she came in thinking she had a big whale and saw all of these airport codes, and she thought he was flying to Switzerland. So what kind of business does he have in Switzerland? And I'm like, his plane's not even big enough to fly to Switzerland, because I knew that. And I'm like, that makes no sense. Nope, here's the airport code. And I had to figure it out. It was a county airport code. For some reason, they overlap, except there's another digit you have to know has to go on there. Yeah, so once I deflated her balloon, you could just see her go, like she thought she was going to have this like huge tax assessment that she could show her bosses. Yeah. Those kind of things are fun for me, but like in your situation, even though it was literally a no change audit, there was zero tax impact because she had nothing. It's still a cost to you, but the sooner you can get through it and the most efficient, the less cost to you, because I had to work it.
Yeah, and some of the questions I found very interesting, like I need to see his time cards.
Yeah, right.
how does he have two businesses, and how does he work at the two businesses? It's like, could you believe that? I was shocked.
Yeah, she was basically trying to say that you can't possibly work both businesses and what we call material participate, meaning you work at least 750 hours or more in each of the businesses. Because at the time you had other things that you were wrapping up that you no longer have businesses.
The ones they sold.
Yeah, and from a tax standpoint, if there are losses, you can take those in the final year. Even if you were passive, I told her, even if he wasn't actively participating in those businesses. It's the final year. He gets those losses anyways. So moot argument. Let's move on to the next point. So
I can't remember one other question. She wanted to move my income to, what was it, investment income, remember, at a higher tax rate or something like that? Remember that whole thing?
I don't remember which one it was.
Me neither, but I was
Yeah.
like, what?
Yeah, but the key to that is knowing your business, knowing what the history is, and knowing the tax law so that I could just nip that stuff quickly and move on. And also to show that she had nowhere to go, and she might as well just wrap this up. And I told her the one point she wanted to harp on was the hours, and that the losses on the other stuff shouldn't flow through. I said, if you want to move forward with that, I'll talk to your supervisor, and we're going to fight that all day long, just to let you know right now. Heads up. So, yeah, no change audit.
That was the weirdest thing. We didn't hear anything for 3 months, 4 months.
Yep. I got one right now. We haven't heard from the auditor for like 5.5 months, but they had to shut down for a month and a half, 2 months too. So that puts them way behind, which honestly, that only works to the taxpayer's advantage because they have time slots that they have to get this stuff off their desks. So that works.
Yeah, and I'm going to tell people, you need to watch your mail because that audit form looked like it was spam mail, remember?
Yeah. They've changed the way the notices look, and there is a lot of spam out there. You should call your accountant first to make sure these things are legit. And what's also happening right now is there's a huge time lag between when things are getting posted. So we're getting notices, and the clients are furious. Why am I getting a notice that this isn't paid? I paid it. I told you I paid it. And you pull up the transcript. Yeah, they already show it as paid 2 days before they sent out or even 2 weeks before they sent out the notice. So there's this huge inefficiency going on with the IRS system. They are trying to restructure, but you just have to be careful. Pick up the phone and don't trust them. I had one client; they were Holocaust survivors, and every time they got anything from the IRS out and run to the office with the notice and freaking out. I'm like, oh, these.
Do you blame them?
I don't.
Right?
These are just your estimate coupons, which I don't even think they send those out anymore. So you're ripping it up. Well, yeah, we don't need that, but that's what we're there for. Again, it's that relationship. I know how they feel about those things.
Right.
They called up and they're like, I'm like, bring it over. They happen to live nearby. I'll take a look at it. Bring it over. No problem. Calm them down. I had to calm you down with the audit.
Yeah, I'm afraid I have a stroke because I don't do anything shady. And I'm like, oh my God. And the funny thing is, it's like almost like I want to make a joke of it. I get like 6 months later, I get a thing in the mail. It just says sorry with a little from the love IRS. Like, remember I called you, I go, here, I sent you a letter. You're like, wow, like, okay. It was just like, basically, we're sorry.
Nonchalant.
Nonchalant, you're good. But it still costs north of $5,000 because all the compiling you did and all the stuff we had to get that they wanted, that was all bullshit, basically.
All the basic data. She wanted to do a site visit, so we had to come out and walk her through that and explain things.
And it asks, where's the cash? Where's the petty cash? We don't have petty cash. We're a body shop.
Again, she was 2 years into the IRS, thought she knew everything, thought she had, I don't know if they have like how they train them, but I feel like they train them and push them out there and like, go get them, And not everybody's a bad guy,
Take your gun, take your little pea shooter and go out there and scare them, I don't get it. So let's switch gears a little bit. And let's talk about financials and how you feel about people reading them, how it's interpreted, how people should set up their P&L sheets and stuff like that. So they're actually useful to them.
Right. Yeah, most people don't know how to read them. They don't know how to read their tax return either. They don't understand them. But I think it's important, even if that's not their wheelhouse, not their strength, that they know what a financial is and the basics of it and what information they can use out of it and what they can, how they can benefit from it. What is a balance sheet? Your assets and your liabilities, your debt. That's the key thing to look at too. Is it changing? Is it increasing? What's it costing you? Let's look at the P&L side. What's the interest side of it? But what's your revenue? And not just for the whole year, especially if you're a cyclical business and you're not steady every month, you kind of need to see where your ups and downs are, how you're tracking to the prior year, and how your cost of goods or how your cost of sales are. Are they in line? If not, what's going on? Some clients know instinctively because they're in the area or working it. They know instinctively where things are. And sometimes I get clients who know pretty much what the numbers are going to, you do actually. You're a good example of that. You know how the numbers are going to shake out before they even end up when you're looking at the financials because you're in tune with it all day long. But some clients don't work it as much or they have a lot of employees. They have a lot of business where they possibly couldn't. Even more important to look at your financials. One other thing we were talking about was your software too. your financials have a bit of a lag. So you want to look at other things like what are your key metrics that show you what's going on with the business day to day. Even for our firm, we have he kicks out our key metrics once a week. Sometimes earlier during tax season, we might get them more frequently.
Yeah, which is pretty interesting. And I would have to say, like, people don't even understand their cost of goods sold, like the top of their P&L sheet. Like, they don't realize that you start out at 100%, you start minusing. By the time you get all done, there's the number. One thing I found helpful in QuickBooks, I don't know, I'm sure you obviously you do it because I've seen you. You have like 15 screens. You sit there. I always do customize my P&L sheet and do percentage of income. It always helps me, so I can say, okay, where's payroll at, and where's this at, and try to manage it by the percentages, right? But one thing I noticed in the last few years for sure is your payroll percentage is not like it used to be.
No,
It just keeps.
payroll has gone up a lot.
Yeah. What did it used to be? Like 25% they would want it, 20 to 25%?
That depends on industry to industry. But, that's the other thing. It's a good point is knowing what your industry metrics should be.
Yes.
So I had a client who owned a small little carry-out place, and he was paying X amount for rent. And I'm like, do you even know if that makes sense? And so I looked at what his industry should be. I'm like, based on that, you need to make revenue of at least $1.5 million to be in the right percentage. She's like, oh, we'll hit that. I'm like, you will? This tiny little place. He's like, we will. And sure enough, he did. So he knew in his mind that the rent was good, but he didn't know if it made sense from an economic standpoint in his industry. So learning the financials and what they mean then gives you the ability to go out and make decisions for purchasing, for signing lease agreements, things like that going forward. How to quote a job. If you need to make 20% as a gross profit margin, then you need to know how that math works. You need to know that that's the percentage you got to make in order to at least clear your cost of goods sold and have enough left over to cover your operating expenses and then have your profit. You're not doing that and you're just throwing out numbers, and at the end of the day, you're like, I make enough, then you're just working a job. You might as well go work for somebody. You own a business as an entrepreneur to make a profit, not just a paycheck.
No, and I would agree with that. And one thing I remember, and I still see it all the time, like, I don't think I made any money this year. Well, let's take a look at everything. Well, wait a second. What is this $3,000 worth of, airlines? What is this? What is it? What's this Edison bill for? Oh, that's for the place up north at the company retreat. Like,
Right.
wait a second.
Yeah.
You do make money. You just spend it all as a business owner, which is your money to spend. But you can't say, how many people you see do that?
I see that a lot. I've had conversations where people say there's no money left in the bank. How can I possibly have made a profit, let alone have taxable income that I'm paying taxes on? I'm like, okay, well, all that money that went out of the bank, money came in and the money went out, was not all business expenses. Let's go, like you just said, let's go look through it and see where the money went. You have all these personal things that went to draw that are not deductions. You cannot deduct your personal mortgage payment. You can't deduct the trip that you took to Cancun, which, by the way, you shouldn't be writing checks directly out of your business account for personal expenses. Write them to yourself as a draw, and then put that money in your personal bank account, and then pay all your personal expenses over there.
Keeps it cleaner for sure.
Keeps it cleaner. And if you ever have Rachel on here talking, she'll talk to you about all the legalities and the reasoning for that too.
Yeah, that's a good point to have Rachel on. She would be hilarious.
Yeah.
She's so passionate.
Yeah,
I don't
she
know
is
if I'd be
too.
able to interview her. I would just sit here and go like this and just let her talk. But hey, yeah. No, I think how is important it is to keep your credit card separate too is one where people get themselves in trouble.
Yeah. Again, same thing. Don't use your business account as a personal bank account. Don't use your business credit card as a personal credit card. Same concept. And then also it makes it harder for the bookkeeper to go and weed all that stuff out. What's the business stuff, or even your internal accounting? What's your business stuff? What's your business stuff? Your personal stuff. At least you still have to code it to office and rent and whatever the categories are, but at least you know they're all business, or most of them will be.
For sure.
Every now and then you run something personal through, it gets mixed up in there. Okay, fine.
Which I think some of the new IRS laws, and I don't know how new they are, but I remember me and you talk about it, it's like we have an office at our house and we work a lot at home. A lot of times I'll come home and Marilyn will be like, hey, I need you to go over this with me. And we sit there for 3 or 4 hours, okay? And that room literally has monitors in it and all our stuff to do business. We're not allowed to really write that off anymore like we used to.
Not with the way your structure is, but if you had a Schedule C, which none of your entities are a sole proprietor, you could. And that is one of the biggest things I see in TikTok. And I just saw an article that talked about how social media tax advice is just getting people in trouble. Because, you can pay yourself rent $100,000 a year, and as long as it's only less than 15 days, you don't pay taxes on it. It's tax-free. The rule is there, but not in the way that they're proposing it should be used. But home and office is a good deduction if the area in your house is used exclusively for business, meaning you have a spare bedroom, you can't use it for sleeping, you can't use it for guests, you can't use it to take a nap. I mean, those are the technical rules. And if you don't, again, your sole proprietors usually where it works best. If you have a corporation like yours or corporations, it doesn't work in that environment. But there are again, it's knowing those rules and how to use them and how to instruct the clients to use them. But, and in the big scheme of things, those tend to be the littler things. Clients that we're talking about, the type of businesses that we're talking about, have so many other things they first have to focus on before we can start drilling down into those little things. Like when you first came to me, there was so much to fix. And you thought I was like the fairy godmother. And then at some point, I'm like, I ran out of fairy dust. Now we're best down at the basics.
Well, if you remember correctly, is when I bought 100% of the company finally, there was losses. Mm-hmm. So I wasn't running it. Somebody else was,
Yep.
and they weren't making the money I make. Mm-hmm. So for the first 2 years, I'm like, this business shit is pretty good. Lots of money going into my pocket. And then you're like, yeah, next year's going to be a little bit different.
Right. Yeah. Well, we were also using those losses efficiently. Prior to that, the losses kept growing and they were going nowhere. You were getting no benefit for them because they weren't being used. Things weren't being structured properly to get the most advantage of them.
Can we talk about that really quick? Because a lot of shop owners are MSOs, multi-shop owners. I'm a multi-shop owner, so my old accountant basically had me W-2ing out of both companies, remember?
Yeah, I don't know how much you want to talk about your details, but yeah.
No, I mean, we could talk vaguely. Sure. We don't need to talk about the millions of dollars I make a year. We don't really want to make everybody jealous.
When you have multiple corporations, there's a thing called, you were paying wages out of both companies. Your wages were more than the FICA limit, so you were paying FICA on both sides of it. The company was paying their share. It's 15.3. The company pays half. You as an employee pay half. Your extra half that you paid, you get back when you file your tax return, but the company doesn't get refunded. Those companies are considered separate businesses. So you were overpaying there. But the other thing that she was doing is she was giving you all of these wages out of the corporation to cover your taxes that were due on your personal return at the end of the year. So she was giving you a large wage. All the money was going to the government to pay the taxes. So you were still netting zero cash flow to your pocket. That W-2 ends up on your tax return, your personal return. You were paying taxes on it. But then that loss in the C corporation went nowhere. So you increased your wages to create a bigger loss on your C corporation that just sat there and did nothing. And then you paid income tax on these wages over here, of which you didn't get any of the cash. So it was just throwing money away to the government at that point. So we restructured things so that we utilized the losses first. We dropped your wages significantly. You still have to analyze what's reasonable compensation, what's appropriate, made sure all those boxes were checked. And it took a couple years to use that up. So yeah, like I said, I was the fairy godmother for those first couple of years.
It was definitely hocus pocus. I was like, whoa, this was eye-opening. And one thing you said earlier on, and I completely agree, I hate surprises. You know how I freak out about surprises. I just do not. I like to have everything nailed down. I like to have a plan and execute it. And when you don't, and you have somebody go, by the way, I made a little mistake. You don't owe 10 grand, you owe 45. That's not a little mistake. Right. That's like the mafia showing up at your house and breaking your legs.
Yeah.
Like that's a lot of money. And that's what kind of spiked the whole thing with the Motor City IRS coming in, because the 1 year we paid it, and then the next year, remember, I got the return after we fixed it.
Yeah, I think the thing that generated the audit on that was the large amount of losses on that year. And their big thing was, how could you have all those losses and be active in all those businesses? There's no way. Well, it was if you sat back and looked at the breakdown of each one of those entities by themselves.
Yeah, it was just it was a disaster that year for sure. Yeah. So going back, one thing that people always want to argue with online, and they always think that they always have to think, well, it's a write-off. But I try to explain it's only a little bit of a write-off, meaning if you have credit card fees in your bank, your company credit cards, and your income, and you don't charge credit card fees, it comes out of your bank account every month, and it can be quite substantial. It's only getting worse now that parts are more expensive, right? It could be 10, 12,000. So you start saying, okay, we're going to charge 3% credit card fees, and people are like, I just go ahead and roll it into my price. Well, the people who pay you with cash or checks get penalized, number one. And number two, well, I don't know what you're worried about. It's a write-off.
Yeah. So people don't understand the difference between a deduction and a credit. Almost everything that a regular business owner is going to experience is a deduction. So yeah, the credit card fees might be $5,000. I'm going to write it off anyways. Okay, you're writing off $5,000. That's $5,000 out of your pocket that you sent to the merchant company. You're going to get a write-off for $5,000, but the $5,000 might only save you 30%. So let's say $1,500 in taxes.
That's
so
my
the
point.
difference. You $5,000 out to the merchant company, but you saved $1,500 in taxes. So the difference of $3,500 is still money that came out of your pocket. So, and it's really hard to get people to understand. And even the TikTok world, write off this, write off that. Go buy this, go buy that. Like you and I have the discussions. I want to buy this. I'm like, well, if you need it, fine. But that's still money out of your pocket. It might cost 10 grand, but you're only going to save 3 grand in taxes. So that's 7 grand that's still out of your pocket that's gone. Now you have an asset for it. And if it's something you need within the next couple of months, then that might make sense. Or you'd rather buy it now because rates are lower, or the cost, like vehicles went up, the cost is going to go up. But you have to have an economic decision behind it rather than just saying, I'm going to get a write-off for it.
Right, for sure. And that's where people make the big mistake. So what do people get themselves in trouble for a lot in their businesses? I know we touched on it a little bit. Like, let's go a little bit in depth. Like, give me some stories, obviously, as much as you can. You're not going to bring any names that people get themselves in trouble for, and you're just like, sooner or later you have to fire them because you're like, you're going to drag me down this mountain.
Yeah. Well, there's the blatant ones. I was telling you earlier, a client wanted bank financing, and they didn't like how the numbers were looking on the financials, which the financials match the tax returns. Sales on the tax return should match sales on the financial, and they wanted their financials to look prettier. So another $300 on the financials. I'm like, did you make an extra $300 that you just chose not to tell me about and held on to it in cash? They're like, yeah. I'm like, okay. And then we'll report them the tax return too. Well, no, why do we got to do that? You're fired. I'm like, yeah, we don't need those kind of clients. That's pretty blatant. But I've had other clients who they think if they make a lot of revenue and they have a lot of expenses going through, that there's a lot of stuff they can bury. And we're not auditors. We're not looking to audit your financials and your financial data before we prepare the tax return. If something doesn't look right or just blatantly, obviously not kosher, doesn't make sense, we're going to point it out and try and rectify it. Our work and everything else that we presented them and all the reconciliations we did were beautiful, and very clean. That's the other thing. You want to make the IRS's auditor's job as easy as possible. You're not lying. We're not representing anything. But I don't, some clients' approach is, no, make them work for it. Make them figure out and reconcile it. It's like, no, let me do all the work, lay it out for them so they can see that your records and your books and records are in good shape. And that builds a level of credibility.
I will tell you, there's a couple things going on in the world that once I say it, you're going to say, I completely understand. Ice cream shops are a real big problem right now for the private equities to buy because these owners have stole the cash year after year after year, and there's no income shown on the books. So now these ice cream shops that were making bank show that they did $100,000 in sales year after year. So, and the owner didn't make anything. So now they're like, these are worth nothing. So my take on small business taking cash, don't do it. It's not worth getting caught. It's just not worth anything. Put it in the bank, pay yourself, pay the taxes on it. Taking cash is a risky thing right now.
Well, there's also the level of intent that's involved in that. So fraud, the F word, adds a whole nother level of penalties that are involved and jail time. I don't know if you saw in the news, this might have been 15 years ago, but there was tax skimming software programs out there in the restaurant industry that you could tack on to, like the Adello software and some of the other management software for the restaurant industry. So they would tack it on, and every 10 sale, it would chuck out, it would like delete the record. I don't know exactly how it worked. And then you print out your reports, you use that number to pay your sales tax to Michigan, and that's what you use. But you had that behind the scene number going on. State of Michigan got wind of that, and they would go in and audit people. And I don't know exactly, I mean, there's audit techniques you can use based on your cost of goods sold and other methods. Sampling, people would walk in, agents, and just record stuff going on, and then he would go back and audit those couple of days that they were in the restaurant. So there was a couple of restaurants that got hit really big time with sales tax assessments and criminal penalties. We got brought in to help reconstruct the records for one client from a tax attorney who wanted to use our services. I felt bad for the people, but like you said, you don't skim out the top like that. It's gonna hurt you.
Yeah, there's a jewelry store in Brighton that sold high-end timepieces, and hey, we'll go ahead and sell this to you, and we won't charge you the sales tax. State of Michigan caught wind of it and came in and did a full audit. They had to pay Michigan plus tax, for the sales tax plus all the penalties. So you can't out-crook the crooks. So they're the only ones allowed to steal. So you got to be really careful. You just don't do it. I mean, I sleep good at night because I don't sit there and worry about that type of stuff because I don't do it. It's just I make enough money. I don't have to steal $400 worth of cash that might cost me $4,000 if I get caught.
Yeah,
plus
it doesn't make
stress.
sense. Yeah, it's in the long run, you're just shooting yourself in the foot. And who wants to live like that? We have worked with some criminal tax attorneys who will bring us in to help us reconstruct records for their clients, and those can be a little fun. But it's also fun being detective and how you're kind of playing like you would on the IRS side or the state of Michigan. Like, how are you going to reconstruct these records to see what the number should be? Because oftentimes in the state side, they have a big number because they've extrapolated from a couple pieces of information. So our goal is not to get the number lower. Our goal is to get to where reality is because they've not gone through all the detail levels. They've done one or two samplings and they can use that. And then the burden of proof is on the taxpayer to prove the number's a lot lower. You're like, okay, yeah, I stole, but it's not that much, because what happens at that level, the amount of tax dollars dictate points and points dictate sentencing terms.
Ooh.
Yeah. So
Wow.
again, it can be a little fun to dabble in that arena, but I don't want my clients, those come from attorneys. I don't want those to be my clients.
Right,
And
Thug
thankfully
Life
they've never
101.
had. Yeah.
Yeah, you don't need freaking
Yeah.
the mob coming in. You need to fix this.
Yeah.
Yeah. So that's kind of crazy. I mean, when you start to really sit there and think about.
And for most clients, they don't have that bandwidth to steal that much. So why go through all that effort to save $500 in taxes or whatever it might be, a nominal amount in the big scheme of things? It's just not worth it. It's more energy than focusing on getting good numbers on your books and driving your sales and driving a better profit margin.
So one thing I want you to explain in your terms, because you'll do obviously a way better job than I, is when we talk about these big, huge corporations, none of these corporations pay tax, and all of us, poor people have to go to work every day and pay tax. But Jeff Bezos, Donald Trump, all these people don't pay taxes. Can you explain that to the listeners?
Yeah, there's another level of that too with the clients. Like my neighbor got $500 more of a refund than I did. So there's a couple different things that are involved there. One, your refund is driven by how much you paid in for taxes. If you pay no taxes during the year, you have the same taxable amount of income as your neighbor, you're going to owe, and he's not. I'm assuming he's paid in taxes throughout the year. So that's one issue. You're not comparing apples to apples. But when it comes to the working man, you're earning your living. You're making a wage. Wages are taxed at ordinary income tax rates. A lot of these rich people who are retired or sit back and own their own businesses or have sold IPOs, their money that they're earning is in the market, is in investments. Investments, qualified dividends, and long-term capital gains, the most they are taxed at is 20% income tax rate. There's net investment income tax that comes into play too, but for the most part, we're talking a flat, capped rate of 20%. Your earnings in the businesses that you run and your wages, the highest tax bracket is 37% for ordinary income. Wages, earned income fall under ordinary income tax rates. Those work up to 37%. Long-term capital gains and qualified dividends cap out at 20%.
So almost double.
So there's a huge differential there. Plus your earnings, earned income, sole proprietor income, wages, you're also paying Social Security taxes. The business is paying 7.5%, you're paying roughly 7.5%. So that's another chunk being added in there. It adds up.
Yeah. That's kind of where, like, you sit there and you talk to these people. So basically the politicians have set this system up.
Yeah, there's always going to be controversy as to what type of system works best. We should go to a flat tax. We should go to a national VAT tax, a sales tax, and then you're based on consumption versus income tax. It's never going to be a good fit for everyone. There is a drive. We'll talk a little politics here.
Go ahead, I'm
in
good.
trying to, make it fair for the low wage income earner, for the less, the people who aren't making as much money. But then the threshold is, well, where's the threshold? Where is you're rich and we're not? Or where's middle income class? So I think they've been trying to set 400,000, 450,000 as the threshold.
For what?
That point in time is when you should be paying a lot more than anybody else. So, but we talked earlier about long-term planning and looking at things from a holistic approach. And that's where some of the estate thought comes into play also is, I push, although that comes out at ordinary rates down the road too, but, how to set yourself up to be like these other people that we're talking about that are paying at a lower, same dollars they're making as you, but they're paying a lower tax rate because there's this qualified dividends and long-term investment or long-term capital gains. It's taking, how do you save that cash? How do you make it more efficient for you now that you're taking profit out of your company so that you can have those type of returns? But you're talking, when you're no longer working. So how much longer, we've talked, and that's the other thing we've talked about is how much longer do you want to work?
Till next Tuesday, I'm hoping.
Yeah. How much longer do you need to work or plan on working? Now, want and needs are two
All the
different
money I'm
things.
making on TikTok, I can quit like in 20 minutes. And I don't even have to go back to work till like Saturday morning.
Yeah, right.
Yeah, now that Americans have bought TikTok and destroyed it.
Yeah, let's see how long that lasts. That's going to be interesting to see how long people are going to be wanting to stay tuned to all these different media outlets, and how much can you take of that over time, or what the next generation is going to be like. That'll be interesting.
No, I would agree, and you could just see it anyway, and we talk about it all the time. And how many people are going to start their own business? Or how many people are going to come and start a business like mine? How many guys that are going to come up, as a mechanic? I mean, these guys can't even handle working as a mechanic and getting yelled at. How are they going to handle the stress of a business? And I want to talk about that. People don't realize how stressful it is to be a business owner, like when you're dealing with the IRS and stuff like that. And it's even worse when you're broke because you don't know how to be a business owner. And in my business, or plumbing, electrical, any of these guys that were tradesmen that said, okay, I'm going to open a business, and they have no business training, aren't crazy like me and sit there and read book after book over the years and beat myself up to figure it out. Because if you remember correctly, I wasn't very good at reading my numbers when I bought my business 100% myself till I really applied myself.
Right.
And now I can actually read it and know what's going on. But a lot of guys just don't take the time to do it. They don't even think writing a bill is important.
Well, they're also so wrapped up. All their time and energy is in running the business. And I know I have a nephew right now who runs, he's like maybe 27, 28. He's still relatively young. And he was a tradesman, electrical, got trained and opened up his own business. And he does really well. He's got quite a few guys who work under him. But he struggles with the business side of it on the back end. And we finally got him a bookkeeper because I told him I can't do this. And he was getting those surprises. But I told him there were going to be surprises because I have no idea what the numbers are. And he's like, but there's no money in the bank. I'm like, well, what did you do with it? Because obviously you're making money. You're spending it,
Right.
So that's been a long process for him to understand that side of it. And then he understands now that he needs to hire somebody, but he's like, I don't have time to sit down and hire somebody. So there is a big difference between doing the work and running the business. And there's going to be a tipping point where it's important that you do that. Otherwise, you're not going to grow. And you're going to be driving yourself into the ground because you're basically working a job. Because you're going to be working it all day long. You could go do that for somebody else. You need to get people under you or product that is driving the profit, not your effort alone. And it's hard to understand that.
No, I would agree with that. I was trying to think who it was. It was a basketball player. But they said to him, it's an older basketball player. They said to him, do you even have a college degree? He said, no, I do not. But I have enough money where I could hire people to do what they do with a college degree.
Right.
I don't remember who said that, but that makes a lot of sense, right? I don't have a college degree. Right. I went to college, but I didn't finish it because I went to work.
I mean, with entrepreneurs, hard work obviously is a skill that you need or a characteristic, and that will take you far. But then you need to make that hard work for you and get the most bang for your buck out of that. And even for me in my industry, it took me a long time. I could see my effort. I could work with the clients. I consulted with them. I worked on the tax returns. I had a product that I saw my effort for. Now I do a lot of training and mentoring and overseeing and keeping up on education, transferring that to my staff. So that didn't happen overnight, and it was a learning curve.
Yeah. How much is AI coming into your arena as far as what you guys are doing?
It's coming into it a lot. The problem is it's just flat out wrong. Yeah, these hallucinations, as they call them, are ridiculous. And so we've told our staff to use it cautiously. And first of all, you cannot put any client information in there. No names, no date of birth, no sensitive information. It's all got to be hypothetical. And we've also used a very tax-specific AI. We have 2 that we use. It does help make our job a little easier. Like, give me the chart for, the HSA contributions over the last couple of years if we're amending returns and need to make sure we can capture that, or, instead of going and digging it all out. So basic things like that, hone in on some of the research. But again, we're using it very cautiously because ChatGPT is, I guess, very pleasing oriented. So
yeah, it's very liberal.
If you're not careful in how you word your question, it kind of knows the answer you want and gives you that answer.
Totally.
And it's been flat out wrong. So the younger generation, I find, gives it more credence, and they're so like, oh, here's the answer. I'm like, I know from my experience that doesn't sound right. Just how I know how the code works and where it's geared towards. So let's go dig a little deeper from a different source. Well, yeah, that's not the answer. But clients are coming to us and saying this and like, hey, I can do this and I can do that. Not quite, And in the tax law, things are oftentimes very facts and circumstances oriented. So even when we find an actual case, and it's a legit, not a made up case, as ChatGPT is known to do. I just came across a tax case that got thrown out because 3 of the cases cited still. People are still citing cases and not making sure that they're legit. But even within actual cases that you think fit your circumstances, you'll read the opinion and it's like, well, they focused on this aspect of their facts and you don't have that. Yours actually is the opposite. So let's go dig a little deeper. We can't use that.
Yeah, it's so today's podcast, that released today, on Spotify, YouTube, where else?
Apple,
yeah.
Google.
I talk about exactly that. Is if you don't have a programmed GPT and you just use open GPT that you download, it's not consistent. It'll give you a different answer every time, right? So when I built my GPT for reading my P&L sheets, I actually did the P&L sheet. I printed it with the percentage of income. And I put it there, and then I put it without the percentage of income in. And I said, give me the percentage income. It got that right after I programmed it. Then I said, okay. Then I freaking blacked out the numbers. I left the numbers at the top, all good. And I put the percentage. I said, give me the numbers backwards. So I made sure
it worked both ways.
Both ways.
Yeah.
I do stuff like that because you're 100% right. It will give you wrong percentages unless you program it. That's the problem with it. Not to get political, when Charlie Kirk got assassinated, I said, Charlie, how did Charlie Kirk die? It literally tried to convince me he did not die. And then I literally told it, I said, what day did Charlie Kirk die? I kept asking this. Finally, it said he died on this date. Well, how did he die? Gunshot wound. I said, wait a second. You said he's still alive. Then it's like, I made a mistake. Like
it'll apologize to you.
It tried to convince me.
Oh, I'm sorry, I was wrong. Well, okay, but you were so darn sure of yourself the first time around. Yeah.
Yeah. So not to go like off the accounting thing, that was one of the big problems I have. I build these custom GPTs for shops. I built one for Garrett, Phil, and Lincoln use, and it has changed everything. But it's programmed to specifically what we do.
Right.
Like if you did one that just did P&L sheets, that's what it does.
But in order to create that, you have to, again, going back to knowing your numbers, how do you want the data to be used? What kind of information do you want it to kick out? So you know the beginning and the end. Okay, now help me get there. Help me get from here to here.
Correct.
So that, and on a regular daily basis, so now that I have good numbers that I want to focus on and look at every day, different set of numbers more in depth on weekly, and then after the month close, then I can look at my monthly financials.
Correct. Mine is set up for weeks, months, years, right? That because regular ChatGPT you download gives you internet answers.
Yep.
What the consensus is.
Right.
You can see it go Reddit, blah, 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 blah. You can see it do all this things and give you the information. So I think that there's companies out there that do repair shop type of stuff that people have called me and said, I paid $800 or $900 a month for this piece of shit. It does not even work. And I look at you, talk to yourself on a one you built basically, and it's doing exactly what we're paying to do. And yours actually works. I'm like, and that's probably
But it's also on the drive that you have. And again, the hard work and the time. And you're not focusing on going out there and, cranking the wrench.
Yep.
You're doing other things to drive more value and benefit.
Yeah, I believe wholeheartedly my job is to look at the numbers. Like I can look at the numbers anywhere, and now it's even better. And AI has changed with us because my numbers are cleaner, because now if there's a problem up front, Phil and Lincoln already come to me and go, hey, just so you know, sublets was freaking 18% this week, and this is why.
Oh, good.
And they're learning.
So now you're training them how to use the information. Yes.
Yeah. So, think about that. Like these guys, I don't have to go. What numbers should be? They know.
Right.
There's not a lot of companies that do that.
The other thing we talked about knowing or having good numbers is having good people.
Yes.
And continually training them and using tools to help make their job easier and better and more efficient. Yeah.
Yeah. And I yell at my people sometimes. Can you believe that?
Yeah. Well, and it's funny too, because, one of our discussions we had about the business and why isn't, I think it was Garrett, why are you struggling with Garrett? Why don't you have more time to do the things you need to do? And you're like, well, I don't have a front end person. I don't have a person behind the desk. And, like, okay, well, what are the plans for doing that? And we're talking, and it wasn't until like 15 minutes later, I'm like, wait, back up. What do you need for that location again? And you explain it to me, and I didn't connect the dots, but I'm relationship driven. It's again, having those conversations. How can I help you? What attorney do you need? What type of other professionals can I bring you? Can I bring you an employee? So that's how you ended up with Phil, my son-in-law. So, yeah.
And it was funny because I was sitting on the couch waiting for him, and I was watching The Sopranos on my phone.
Yeah.
And Tony was just like swearing, and he walks in, he's like, hey, I'm Phil. I'm like, what's up? And he's like, Sopranos? I'm like, yeah. And he's like, yeah, I think I'm going to get along just fine here. And me and him sat on the couch and talked.
Even when I thought of that, I wouldn't have brought him up if I didn't think it might not work out. And you've been a client for quite a few years by then. So
that's when I had that whole thing go where the service advisor went sideways. And this is where most guys that run a business, and I'll go back. My wife always wanted to open an ice cream shop or a hair studio. And I said, that is the dumbest idea I've ever heard. She said, why? And I'm going to stick to this day. I will never own a business that I cannot open the door, turn the lights on, and run that business by myself. Meaning know how to run the service. I can run my service desk. I can do estimating. I can go out and fix cars. I could, I can drive the tow truck. I can do pretty much everything. A lot of guys go and buy these businesses. They don't even know the business. I grew up in the business.
Yeah. Yeah.
And that's what happened when, if you remember, I had that Sarah chick that was absolutely fantastic. Then she just had a little bit of a problem with life, and she just quit me up and so I just sat back at that desk.
Right. You gotta be able to fill those gaps if you need to too. Not that you want to be doing that the whole time. That's not the best use of your time, but you know enough to be able to keep the business running and have to step in to do it.
Right. And that was 4 years ago now. And Phil's been with us 4 years ago. Now I got Lincoln up there with him, and they just get along great. My 18-year-old son. So they're kind of Lincoln's a mini me.
Yeah.
And then you got Phil, is so chill. Sometimes they want to check his pulse. I was like, Phil, did I wake you up? No, I'm good. He just sits there and types away and just smiles and happy and just never has mood swings. The guy's just a solid guy at work. He just shows up, he does his job, he goes home. And he's a good guy. I mean, thank you for, putting him to me, giving him to me, because he really has worked out well for us. And he has a lot of the same beliefs we do. And, that's one people...
Well, that's the other thing that's important is making sure I give clients, when I give referrals for an attorney or a financial advisor or any other resource, is that it's a good fit. Now, there are some clients, I know who, when I'm going to give them an attorney referral, they want to see gray hair. Just that's their nature. They want to know, they don't want somebody who's 30, 40. They don't feel like gray hair is what they need. I'm going to give them gray hair. Again, I'm still going to make sure it's a good fit for them and the person's reliable and professional. But I'm not going to give them then somebody that's 30, even though I think they can do the job just as well, because it's not going to be a good fit for them. I know what they need. And that's part of having that relationship and just not coming in and doing your tax return once a year. Now, granted, we have clients that are like that. We have, we're not a big 1040 client, but based business, but we have a lot of 1040s that we do from our business clients. And then we have those who are like, can you do my son? Can you do my daughter? Can you do my son-in-law? Can you do my friend, my neighbor? Again, if it's a good fit, we're not going to charge H&R Block rates, even if your return is a W-2 and a 1098 mortgage interest. And I'm honest with clients about that. I'm like, what might make more sense is for you to come and see me every 3 years or see a CPA just to look over things because you have 3 years to amend. Or if you want that relationship, I get to know you. And then when an event comes up where you need a plug and play, we already know what's going on. We can just dive in and provide the services that you need at that point in time.
No, it's kind of funny because Lincoln models his business after the way I run my businesses. So when he got double tax returns last year, I'm like, I called you and you're like, well, maybe he's not the place. Maybe we're too expensive for us. I call Lincoln. I'm like, hey, talk to Maria. She says, maybe we're not the place. He's like, why did you call her? I said, well, I kind of thought it was expensive. He goes, I didn't. Because I bought a peace of mind. He's like, I'm fine.
Peace of mind.
Like, I see what you, and we talked about it. He's like, I see what you go through and you trust him, right? I go, yeah. He goes, then I'm going to pay.
Yeah. So
he's like, I don't have to worry about it.
Yep.
He's like, I'm 18 years old. He's like, I'm probably the only guy who has to pay quarterlies.
At his age, he probably is of my clients. Yeah. He's a go-getter.
Yeah. And you know what?
And you're setting him up with good habits and he's learning them. And you're trying to override the good habits. What are you doing?
I know, right? Trying to get a discount for him. I'm like being an asshole of a dad. I don't know. I will tell you, and I said this 100 times on my podcast, it's like, I was apprehensive of bringing him into our business.
Mm-hmm. It's hard with family. It can be. Yeah.
But he's got all the same tendencies as me, so I'm now I have no problems with it. Like, he does the same shit as me. He might not be as smooth at sending it as I am, but he's got himself in trouble a couple of times. He lost us a couple of customers because they don't like an 18-year-old kid arguing back with him. It is what it is, I'm sure I lost Garrett Auto and Truck over the years to lots of customers with my attitude.
But those are all learning experiences, or hopefully they are, for him.
Yeah, and it's good. One last thing I want to talk about, because this comes up a lot. An LLC, the personal income tax that you have to pay when you have an LLC, like, say, a realtor, right? Mm-hmm. You have to pay a personal tax. The 3%, is it? Versus an S Corp. Is that true, or how is that structured?
Okay, so a couple of things we got to break down. An LLC does not mean doesn't equate to a sole proprietor. An LLC is called a limited liability company. It's a legal concept at the state level that the IRS does not recognize for tax purposes. So then the LLC structure needs to make an election to decide how it's going to be treated for tax purposes.
And it could be a C Corp, an S Corp, all kinds. You could have LLC.
If it's one owner, it can be a C Corp, S Corp, or a sole proprietor, which is a Schedule C. If it's two or more owners, it can be a C Corp, an S Corp, or a partnership. It cannot be a sole proprietor. So most people, when they say LLC, it's usually one owner. They're treated as a Schedule C, which means you're running the business, you're a sole proprietor, it gets reported on Schedule C of your 1040. You're going to be paying income tax on whatever that bottom line is, as well as self-employment tax, which is 15.3%. Which if you're an employee, it's 7.65% goes out of your Social Security and Medicare wage line, comes out of your pocket. The employer pays the other 7.65%.
So they're still getting theirs.
The government's still getting 15.3%. If you're doing a Schedule C, whether you're an LLC or just a sole proprietor on its own, you're paying the whole 15.3%. As well as the income tax. So that's a pretty big hit. I tell clients, when you're a sole proprietor and you're making some money, you can plan that 30% at the federal level is what you're going to be paying in taxes, 15% for the self-employment tax and probably another 15%, give or take, on the income tax side of things. And that's the part that takes people by surprise, is that additional self-employment tax number. If you're an S Corp, you don't have that second layer of tax on the profit. An S Corp, you take part of your profit out as earnings because you're running the business, you're working, you got to get paid a wage out of a corporation. It's a separate type of legal entity, taxing entity. You treat people who work for you as employees, including even if you happen to be the owner. So you take out a wage, that's income tax and Social Security tax, 7.65%. Your business is paying the other 7.65%. So the IRS is still getting their 15.3% out of you. The remaining profit that's left over is then only subject to income tax. It flows through on a Form K-1 onto your 1040. That's only subject to income tax, not self-employment tax. So I have clients saying, wow, S-Corps are the best thing in the world.
That's
Great.
where I was going with
Let's set
this.
that up. And I'm not going to take any wages. I'm going to have it all come out and just pay income tax, no Social Security tax, no self-employment tax. It doesn't work that way. The IRS will actually red flag the return if there's no line on the officer wage line. Okay, fine, wages are $1,000. Like, no, let's create some accountability as to how much you're working, what are you doing? And that's one of the things that came up in your audit for the S-Corp entity, was your wage, an appropriate wage amount, and get some documentation. Now you have to file a payroll. You have to have a payroll company. Our firm will not be doing payroll tax returns, quarterly, unemployment. It's just too much work. There's too many nuances now that are involved. So we use a payroll company for our clients. You might take out a payroll once a month, one at the end of the year, whatever. You're taking a wage, as you do. And then whatever the remaining profit is coming out only subject to income tax. So you're saving, if you're making a couple $100,000 out of the business and your wages are, let's say, 50, and that's reasonable, then the 150, if you were a Schedule C, you'd be paying employment tax, self-employment tax, and income tax. Now, as the S Corp, you're only paying on that 150,000 an extra 15%. Actually, be a little bit less because once you cap out for FICA for self-employment tax, you're only paying at 3%. 12% of it just falls off.
Well, that was kind of answered all my questions, because I know a guy that has a construction company. He's a single guy, and it's an LLC, like you talked about.
As a sole proprietor.
Correct.
Okay. Yep.
And he's like, all the other guys that own the LLC, they switch over to S Corp. It saves them on that tax.
Yep.
Right up to the point where they get caught, right?
Well,
if they're not
taking wages, yeah.
Right.
And they may never get caught, but the law is what it is, and you try and work within law. And for, 50, 70,000, at least you're putting a number on there that's somewhat reasonable. You can argue that way. If the number is 0, you really don't have an argument.
Correct.
Obviously, you're working it and you're running it, especially if you're the only person in the business.
Right. Right. So one last thing. People don't understand when they have that type of structure going on that the money is getting taxed either in the bank or out of the bank, correct?
What do you mean?
Like on the LLCs, they're like, well, I'm just going to leave all the money in the LLC.
Oh, yeah. That's the other conversation that we have with clients. They're so concerned about, well, if I take the money out, then I pay taxes on it. No, as an entity, as a business, whatever the business makes, regardless of what you do with the money, you're paying taxes on it. Now, if you're using that money to pay for expenses and equipment, well, then that's a deduction.
Absolutely.
Right? But at the end of the day, if that money just sits there, you've still earned it. You made the money, you're going to be paying taxes on it. If you take it out of the bank account and give it to yourself, that's fine because you earned it. You're paying taxes on it, even if you take the money out 2-3 years later. And I have those conversations with a client, not all clients, but some clients. And it's really hard for them to understand because it is a very different structure than having a paycheck working as an employee. When you are the business owner and you're the one taking home the paycheck and you have leftover money in the S Corp or even a Schedule C LLC, anything you made, you're paying taxes on. It's all your money. Take it out. If you are short for that month and need more money in the business, then put it back in.
Well, what if I buy a bunch of inventory? Put it on the shelf.
Yeah, so inventory is a little tricky, depending on what your gross receipt thresholds are as to whether depending on the dollars, you may not be able to deduct all of it. There is somewhat of a matching. You can't buy $1 million of inventory for the next 10 years and write it all off today.
That's what people don't understand.
Right, yeah.
Yeah, because the government still said, well, that's money you could have spent, gave us the tax on, or spend it here. So either way, we want our money, right?
Yeah. There's going to be somewhat of a matching component against income versus the items that you bought to pay for it. You can't prepay your rent for 5 years either. You can prepay up to about 12 months and write that off in the current year. But then next year, that only helps you in the first year, by the way, because then next year you can't prepay 2 years worth, so.
Right. I know I could talk about this shit all day long. One thing I will say that I just popped into my head, once again, I want to tell everybody, the listeners, it's like, okay, if you have a shop and you're listening to this, you should know your numbers, your back-end numbers, your front-end numbers, know your percentages, where they should be and stuff like that, and have bookkeeping. You could have a bookkeeper. I'm never saying you shouldn't have a bookkeeper. If you don't have your wife, family member, or whatever, but you should definitely overlook the bookkeeper, and you should be in control of your cash flow, paying the bills, what bills to pay weekly and stuff like that. You should just pay somebody and go, oh, I trust them. Okay, how many people have you heard?
Oh, no, I've had clients who've had embezzlement issues. And
let's talk about that.
And occasionally from time to time, we'll kick out a letter or reminders to clients, like these are the things that you should be looking at and monitoring. And small businesses are hard to have all the levels of internal control that you would need, but there are things you can do. So we give them like a checklist, like have the bank statements come to your house. If they're coming to the office, you should be the ones opening them. If you don't get them physically, go online and look at them. Look at what the canceled checks are going on. Look at the back behind the canceled checks. Look at your credit card statements. Do you see stuff going through that doesn't belong there? Pull the credit report for the business. Is there a credit card in the business's name that you didn't authorize that's out there that's getting paid? We've seen quite a few embezzlement through the past. Yeah, we had one client reach out to us furious. We're like, we just sent you that internal control reminder like 4 months ago, did you look at that? You're like, no. Well, it is hard. I get it as a small business owner, but there are things you can do, and you can't. There is the temptation. Oh, they're doing it all. It's so much easier for me, so I can run my business. But you're still the business owner. You still have to have a level of control, and there's that whole trust. Put systems in place, even maybe through some sort of AI bot or automations that can test that kind of stuff for you and look at it.
No, totally. I still pick all my payables every week for all the companies. I'm still the guy.
Yeah.
Brown's like, hey,
you may not be the one signing the check, but
Nope.
you authorize which ones are going to get paid.
Yeah, I pay so-and-so. I
Yeah.
don't like that vendor anyway. He pissed me off this week. I don't pay him.
Yeah.
I'm still that old school.
Don't give your bookkeeper your signature stamp. We had that happen with one client, and then they yelled at us. I'm like, we don't see your QuickBooks at the back end. We don't do proactive stuff like the stuff we're talking about. We see it at the end of the year, and you gave your bookkeeper your signature stamp. Yeah. Oh, how could I have helped you there?
Yeah, right. You gave him the keys to the freaking kingdom.
Yeah.
And
So.
yeah, we definitely, I still pick all the bills. And she set some on my desk, and I look through the invoices too. And a couple times now people have to be careful. They'll send invoices to companies. You owe for webs, for names forever, $400.
Yep.
How many people do you think just write the check for $400?
Right. Or IRS notices, then our IRS notices, you owe $35.22. Okay, It's not worth calling my accountant. It's not, here you go. Well, that didn't go to the IRS.
And they got your check.
And and I've had a couple clients, when they open businesses, they'll get all this, it looks legit, like, here's certification to get this license, and you have to put these up on your wall. And they've called me, is this scammy? I'm like, yeah, absolutely. You do not need to pay them $52.22 to put a poster on your wall that says you follow, OSHA laws.
It's
But they get that when you register. They get a whole list of information. And then you just know you registered and you started a business. This looks legit. It's coming from the state of Michigan. It's not,
Yeah, education
Well,
is
and
key.
the other thing is, too, totally unrelated to that, not intentional embezzlement, whatever, is things clearing your bank account that don't belong there. I've had clients' checks clear a different account, and it didn't, like, we'll do the bank recs, or we'll look them over for the client, or the bookkeeper will call us, and it's like, well, this check never cleared, but the bank said it did. They cleared it to a different bank account.
Yes, we've had that happen.
Yeah. I mean,
Yep.
And maybe one of them was yours. It's like, what? Or a fraudulent charge will go through, somebody in, I don't name a country, India, that try to run it through, and the bank doesn't pick up on that. So, and if one goes through a small one, then the next time will be a bigger one.
And the accounting in some of these banks, I'll say I wrote a substantial check, and all but $50,000 posted. We're like, what the hell?
Out of the one check?
Out of the check. Huh. Yeah. And Marilyn called. She's like, hey, it shows you took it out of our account, but you applied, there's $50,000 applied to the missing part of it. And we went through a bunch of people at Chase, and they finally come and said, yeah, you paid over the amount that we would accept for one day. It's in limbo.
Oh.
She's like, in limbo?
Yeah.
50 grand's in limbo. We see where you took it, so we're good there, but it was not all applied.
Yeah.
And about 5 days later, it applied.
Wow.
But that was a little bit weird.
Yeah.
That happened not long ago. So you kind of got to watch this stuff.
Yeah, and if you're doing your bank recs and all your accounting at the end of the year, there's 12 months of stuff that went on that, one, how are you going to know if any of it was incorrect? And two, even if you do identify something like that, good luck trying to get it fixed that far after the fact.
Yeah, we reconcile our bank accounts every month, but I have friends.
You could do it daily.
Yeah.
You could do it weekly.
Yeah. We do it. Marilyn does it the first every month, but we have friends that say we don't do that. Well, we've come up where the credit card processor doesn't give us $5,000 or $6,000. We call them, like, oh, we gave it to the wrong account or
yeah.
gave it to another client. Like we've had that.
I've seen it with the younger generation. Everything is paid ACH, so there's no checks. And so they're not looking at their bank accounts to see if other stuff's going on. They know they paid something, out it goes, but they're not looking to see like what else went through my bank account. Yeah.
Yeah, when we bought our place up north, they said we need an ACH. And I said, yeah, that ain't happening.
Well, and with ACHs, you have to be careful. Do not do those through, do not get instructions through emails because those get intercepted a lot.
That's where I was going with that.
I used to be on the board of a nonprofit organization, and we would give grants out for like $50,000, $100,000, some of them overseas, and I would get the instructions via paper, like phone call or a fax.
Yep.
And I am no longer on that board, but the president and I were talking a while back, and he said, yeah, there was another organization that he consults with, and they had like $500,000 intercepted in an email, and it went to offshore somewhere, gone. $500,000 gone because they intercepted that email and gave the wrong wire, or the fraudulent wire instructions.
Yeah, they're doing it to mortgage companies right
Yep.
now. They sit in their boxes, and when it comes in, they just all of a sudden redistribute it with their information.
Yep.
And once you initiate an ACH, if you don't yet,
Yeah.
you have to pay
done.
monthly, it's gone.
Yeah.
So my daughter actually was my realtor on that. She said, yeah, this guy is not going to do an ACH. He will bring a check. And they said, well, we're not going to take a check. She's like, that's fine. We'll find another, title company.
Wow.
And all of a sudden we'll verify the
They
check.
have to be like a cashier's check.
It was a cashier's check. But I wasn't going to initiate an ACH because I don't trust the system. The system is too broken. I mean, to wrap it up, we had all the checks stolen here about a year and a half ago. The guy in the post office was really taking the checks that we were turning in, and they were washing them and stuff like that. They paid their own Edison bill, the same exact amount that we owed. So they took our Edison bill out of the mail. They paid our bill, and then they freaking went and paid their other bill with a fake check.
Oh, geez.
So Maryland reconciling the bank account only caught it because it happened the 5th of the month. They cashed it. Then towards the end of the month, they did it again. So she's like, oh, wait a second. How could that be? It was one check. They did that. We called that Edison. They're like, yeah, did you know somebody in Detroit? They wouldn't tell us the name. We have to protect them.
Right. Oh, yeah.
Oh, you have to protect the crook. Okay.
Yeah. No, that can be very frustrating. Even and the IRS is switching to a big digital push. No longer going to be accepting checks to pay. You have to pay online, and they're going to be sending refunds, either direct deposit or now they're going to be giving debit cards. So I'm afraid what's going to happen with the debit card side of it. But and that's great. Let's pay stuff online, but they're not posting it. And you got a confirmation number, and it never hit the account. I'm like, where is it? And they're like, well, we'll let you know. It's in limbo land somewhere. In the meantime, my client's getting notices to pay and interest and intends to levy. So then we got to call and put a hold on that, again, costing them money. But you got to be on top of this stuff. Even on the digital process, you can't, you have to follow up on it. You can't just rely on it.
Do you ever had any clients, the IRS, come up and padlock their building?
Oh, yes.
They really show up with the freaking tools and this leg bolts and a freaking hasp.
That was a long time ago, but yeah, we've had one. Yep.
They did it to
They don't mess around.
Yeah,
they have a little less manpower now, so it might take a little longer, but yeah, it's not funny. In the state of Michigan too, same thing. They'll go in and levy your bank accounts. I had a client they pulled out for sales tax. He wasn't keeping up on it. They pulled out like $34,000, and he thought I could fix that. I'm like, I can't fix that. I got you on a payment plan. You didn't stick to the payment plan. So they took it. They made sure you stuck to the payment plan.
And you as an accountant, I wouldn't feel sorry for them. Like we set up the rules of the game. Here they are. And you didn't play the game right. So that's what you get.
It's hard. Yeah. There's a lot of violin stories, and you can only feel so much sympathy, and it can only give so much of my time and energy to help them if they're not going to help themselves.
Yeah.
But again, we don't really let those clients stick around. They're not a good fit. They don't work well. Yeah.
Yeah. Professionals and blow off the knuckleheads. That's what we do.
Well, time and energy. I only have so much of it, and I got to give it to where I'm going to get the most value from my clients like yourself. And it's not fair to my clients or my staff that we maintain clients like that.
Yeah, well, this was awesome. This is probably one of the better podcasts. I could talk about this shit forever.
I know, yeah.
Yeah. So Maria Montie from Shindel Rock, she's an accountant. If you need some help with your repair shop, this is the lady to do it. So thanks for being on.
Yeah, thank you very much.
All right, that's going to do it for this episode of Repair Shop Reckoning. If this helped you, please make sure to subscribe so you don't miss what's coming next. We drop real conversations, real systems, and real solutions every week. We'll see you back here next time on Repair Shop Reckoning.